Hi, this is Dave. It is Sunday, October the 21st, closing out the week for Friday, October the 19th, and just taking a look at this week's market recap. Let's start out with the Dow, a little bit different format this week. What you're looking at here is you have a weekly chart of the Dow futures and a daily chart of the Dow futures. So here we've got the weekly, and here we've got the daily. Okay, so we're just going to take a look at the market from this perspective and compare them side by side. So starting off here on the daily chart, what we have is we had this sort of cup pattern here, and this cup pattern had the pullback with the handle to the trend line down in and around that area here. So here was the cup pattern, here was the handle, pull back down to support right in this area here, and then we had a breakout above this level right into a 1272 extension. Now this extension, this Fibonacci extension, was measured from this high at 100% to, this is the high, to this low at 0% here. So here was the high, here was the low, and you have the 1272 extension around this level here, and you can see that that target was met. So if you look at this on the weekly chart, here's the same thing on the weekly chart where you had the pullback and then you hit the 1272 extension right in around there. Okay, so that's already happened. Now the interesting thing to note this week, and it's a little bit more obvious on the daily chart, but let's take a look at the weekly chart. And I'm just going to kind of jump back and forth between these two charts. On the weekly chart, 13,200. Daily chart, same level, 13,200. This is the major support level, in my opinion. And this is really the line in the sand, in my opinion, between long and short. So that's a key level that I've got marked on my charts. You can see that it's important going back because, over here we had a hard time getting through it. And then we pushed through it, we came back down to support, and we've been holding that on the weekly chart. On the daily chart, it's a little bit more obvious, where here was, your major resistance, you pulled back, and then you consolidated, and then you pushed through here, and you've come back down, and you've tested it here, and you significantly held it, and you pushed off right in around this area here. So if we look at the market from that perspective, we can see a couple of interesting things happening. So the first thing, let me just expand out, or zoom in rather, on the daily chart. So on the daily chart here on our right, the important thing to note is that this trend line is still fairly intact, this white trend line here, and this blue line is the 50-period exponential moving average. And you can see here that we've been holding the 50-period exponential moving average throughout this entire uptrend. So the interesting things to note this week are you had this situation here where you had a slightly higher high in price, and then if you look at this this trending indicator here, you had declining momentum. So essentially this is a technical divergence where you have this higher high in price, and then you have this lower high in momentum on this this trending indicator. This is a proprietary indicator that I've written, so it's not important exactly how it works. It's just important to understand that it measures the trend. So this could very well be an RSI or a MACD, whatever kind of trending indicators you want to use, or whatever momentum style of indicator you want to use. And in this case, this is just an indicator that I wrote. So I'm looking at this, higher high divergence here, and that technical divergence, I guess technically is played out where you had a pullback. But the interesting thing to note here, is now what you have is a situation where you've pulled down to support in and around this area, and then you have this lower high established with this sell-off on Friday. So let me just remove this this technical divergence here, and let's take a look at this minor trend line here. And what you can see happen is we put in technically what I would consider a lower high. Okay, we put in a lower high, and now we've come down and we're back down to the 50-period exponential moving average. So this area here is really the major support in my opinion, 13,200, and that is really the line in the sand. So what I'm looking for is for the market to either hold this level, and push back off, or for it to actually break through this level. So what I'd be looking for is this kind of a pattern. I'd be looking for, I'm just going to draw this in red, in order to get bearish, I'd be looking for this kind of pattern to kind of take place, have it fail to put in a higher, another higher high, right? And let me just extend this trend line so it's more obvious. So I'm going to extend this trend line to the right, and this is basically what I'd be looking for in order to get bearish on this market. Something like this, and then, you know, push down, and here is, you know, the ultimate breakthrough. Okay, so this area is really a key level to look at, and I'd be looking for this kind of situation to take place where we fail to put in, here we have a lower high, we failed to put in a higher high, we failed to put in a higher high, so we have another lower high, let's say, and we have a lower low. Okay, we have a swing point, let's just call it a swing point low. So we have a swing point low, and then, you know, we put in a swing point high, which is a lower high, and then we just fail that. So that's one of the scenarios that I'm looking for. The other scenario that I'm looking for is where we just, you know, we just do this. Let me draw this in green. We just do this, we hold, and then we break that trend line. If we go ahead and break this trend line, then that is going to put me back on the bullish side. That would put me back, you know, bullish. So if we do that, I'm more of a bull than a bear. I'm slightly more bullish than bearish as long as we're holding decisively this 13,200 level. That's really my line in the sand between long and short. So the other scenario could be that we just do one of these. Okay, that's another possibility, and that's a possibility we should be prepared for. You know, or, you know, do one of these and then we bounce up again, but we fail to put in a higher high, and then we come crashing down through this level. So this is really the key level here. This is really the key level here. So that's kind of what I'm looking at. This would make me bearish. So this would make me a bear, you know, a break of that 13,200 level. And what would make me a bull would be, you know, to hold this level and then to break that trend line right there. So I hope that was kind of a long explanation, but I hope that is clear, that this is really my line in the sand, 13,200 between long and short. That's kind of what I'm looking at. We've had a lot of strange things kind of go on in the market this week, you know, with Google earnings. There's a little bit of weirdness going on there with Google earnings, that in terms of, you know, the announcement was released early. It seems like there's some shenanigans going on, but you've got these earnings reports coming out, and they are, at least for the time being, negatively affecting the market. So interesting point to note as well, though. I was talking with Don Valou. He's in the Canadian technical analysis and fund industry. He's really quite well known. I was speaking with him at the Money Show on you know, this past Saturday, just yesterday rather, and one of the things that he had been mentioning, both in his presentation and, you know, just kind of speaking with him offline there, was that
area to look at on the calendar from a seasonal perspective. So essentially what, and I hope I'm accurate in kind of repeating this, but I think what Don was saying was that look at the dates of October the 28th and then around that calendar date for a significant bottom in the market, and for that bottom in the market to sort of hold and then look for buy signals. So you're essentially looking for the seasonality play, which is, if I understand correctly, is essentially a bottoming in the stock indices
around October the 28th, and then looking for technical buy signals to look at, potentially getting on the long side. So I'm going to be looking at that. That's really, really interesting. We've had Don out at the at our CSTA meeting, at our last CSTA meeting in October, and Don will actually be out at the Oakville chapter CSTA meeting this upcoming November. I believe it's November the 14th. So the CSTA Oakville chapter meets on the second Wednesday of each month. So Don will be back out on the second Wednesday of November, rather, and it'll be interesting to talk to him, because that will have given us enough time for this sort of to play out and see, if this has come into play, or what the projected update is on the specific play in the stock indices. So I'm going to follow up with Don about that on the November meeting, CSTA Oakville chapter meeting. Which has, I'm not sure if you all know, but I started running those meetings, and I'm in the process of becoming the Oakville chapter director. So, they're great meetings. I suggest you come out and, network with the other members and speakers that we have regularly at these meetings. They're doing really well, and we're looking forward to them moving forward. So this is all I have
for the stock indices this week. I'm not going to bother looking at the other stock index futures. Let's just take a quick look at the euro, and let me just clear off the screen here, and let's take a quick look at the euro here at EC. Okay, I apologize, the computer's running a little bit slow for some reason. Could be that I have too many applications running here in the background. So taking a look at the euro, I apologize, these charts look really messy, but essentially what we have here, if we look at the weekly chart, we have a couple of trend lines in play here. And we were looking at Fibonacci analysis from this high to this low, this high to this low. And essentially what we have is we had the trending indicator turn bullish, but we found resistance right at the 50% retracement, which is not uncommon, especially on a weekly chart. So you initially found resistance here, and then you pulled back, and then you had something bullish take place here, where you had the 8-period moving average cross above the 21-period moving average. And now what you're doing is you're coming back up and you're retesting this 50-period, or I'm sorry, this 50% retracement. So the question is really, you're back in and around this key line in the sand level at $1.30. This has been a really important level going back. This is where we broke this level and precipitated this big decline, and now we're back up right back where we started at $1.30. So the question is really, are we going to, put in a bullish, are we going to continue to remain bullish out of this consolidation and push up into the 618, which is around $1.32-ish, and then push back into, this trend line? Or are we going to fail this level and sell back off and retest the lows? So that's kind of what I'm looking at on the weekly chart. If you look now at the daily chart, you've got the same kind of scenario where you had the 821 crossover over here, and you failed to put in a higher high here, but you're still net bullish, but with major resistance at this 50% retracement around $1.31.50, $1.31.60. So when you look at it from that perspective, you're holding this minor trend line, but you've got you really have some challenge points above you, and even though your 8 is above your 21 is above your 50-period moving average, and they're all sloping higher now, you really have to get above these key resistance levels in order to get anything actionable to the high side. Let me just zoom out a little bit, and you can see here you've got this other trend line in play. This is sort of looking like a bit of a magnet into maybe into the 618, which lines up nicely with this downtrend line, which is similar to this downtrend line, but on the daily chart. So that's all I really have on the euro as well. At this point, this would be, there's nothing really actionable to do in here. But what I'm really watching here is, holding this $1.30 level, seeing if we can break above, this key resistance. And if we can, then the air to play is really between these levels here to the upside. And then this is going to be the next, decision point, or the next major area of contention. So that's all I have for the euro today. I apologize if this video is a little bit long. I didn't do an update last week, but stay tuned for posts that are coming out, and I'll be updating all the members of the meetup groups, the various meetup groups that I run on upcoming meetings, both with the CSTA Oakville chapter and with our upcoming meetups at my trading floor office. And we'll look forward to seeing you at the next video update, or at a meetup, or at a CSTA Oakville chapter meeting. Good trading and investing, and we shall talk to you soon. Be well.